Good evening to all of you as per the time zone from which you have logged in, and welcome to the conference call of our fourth quarter and full year financial year of 2018 results and business updates. Thank you all for taking this time. A quick update. We are happy to announce that we have received occupation certificate for our project Esquire, and we have completed this project in time and well before the date that we had mentioned in our RERA submission. We've also leased 4 floors of Commerce 2 to WeWork, and we continue to see excellent inquiry, and we are very hopeful that the rest of the building will also be leased quickly. You're also aware that we had launched a scheme, a new marketing scheme for our completed project, which is Esquire and Exquisite, and we are very happy to inform you that we've received a phenomenal response for that. I will now hand over the call to Somil Daru to take you through the numbers, and again, both of us will be more than happy to answer individual questions. Thank you.
Thank you, Mr. Oberoi. I guess most of you would have received the presentation from the IR team, and if not, the same is also available on the website along with the results which have been filed with the exchanges. To come to the numbers, in terms of consolidated financials, the total consolidated revenue for Q4FY18 was 352 crores. This was as against 302 crores for Q4FY17. And for the full year FY18, the total consolidated revenue was 1,292 crores as against 1,161 crores for FY17. The consolidated PBT for Q4 FY18 was 178 crores. This is as against 151 crores for Q4 FY17. And the consolidated PBT for the full year FY18 was 649 crores as against 565 crores for FY17. The consolidated PAT for the quarter was at 142 crores as against 101 crores for the same quarter last year. And the consolidated PAT for the full year FY18 stood at 458 crores as against 378 crores for FY17. Moving on to the asset level performance and with the investment properties, Oberoi Mall, which is the retail asset, contributed about 29 crores to the operating revenue for this quarter as against 25 crores for the Q4 FY17. For FY18, the operating revenue was 110 crore as against 100 crores for FY17. The EBITDA margins in this vertical continue to be in excess of 99%. The EBITDA margins in this vertical is about 94%. For commerce, our office space asset contributed about 11 crores to the operating revenue for this quarter as against about 12 crores for the same quarter last year. For FY18, the operating revenue was at about 45 crores as against 48 crores for FY17. The EBITDA margins in this vertical continue to be in excess of 99%. In Commerce 2 Phase 1, that contributed about 12 crores for this quarter as against 8 crores for Q4 FY17. For FY18, the operating revenue was 48 crores as against 28 crores for FY17. The EBITDA margin in this vertical stands at about 84%. The Westin Mumbai Garden City contributed about 34 crores to the operating revenue for Q4 FY18. This is as against 33 crores for Q4 FY17. And for the FY18, the operating revenue was 128 crores as against 126 crores for FY17. The EBITDA margins in this vertical continue to be in excess of 30%. Moving on to the development properties, for Esquire, of the total project of 21.22 lakh square feet, we booked a little over 42,000 square feet in Q4 FY18. Till date, we have booked about 13.34 lakh square feet, which is about 63% of the inventory. The total booking value for Q4 FY18 is rupees 92 crores as against rupees 38 crores in Q4 FY17, and the cumulative booking value till date is 2,011 crores. The total revenue recognized for this project in Q4 FY18 is 184 crores, and the cumulative revenue recognition till date is about 1,879 crores. For Exquisite, of the total project of, again, 15.47 lakh square feet, we have booked about a little over 3,500 square feet in this quarter. Till date, about 14.02 lakh square feet, which is more than 91% of the inventory in this project. The total booking value for Q4FY18 is rupees 8 crore, as against rupees 16 crore in Q4FY17. The cumulative booking value till date is 2,294 crores. And the total revenue recognized for this project in the quarter is 8 crores, and the cumulative revenue recognition till date is again 2,294 crores on account of 100% project completion. For Prisma, of the total project of 2.68 lakh square feet, we have booked about 8,778 square feet in this quarter. Till date, about 2.09 lakh square feet, which is about 78% of the inventory in this project. The total booking value for Q4FY18 is rupees 16 crores, as against rupees 22 crores in Q4FY17. Cumulative booking value till date is about 364 crores. And the total revenue recognized for this project in this quarter is 43 crores, and cumulative revenue recognition till date is about 301 crores. For Mulund, Eternia, Q4FY18, we booked about 6,900 square feet, so till date about 5.09 lakh square feet. The total booking value in this quarter was 10 crores as against 20 crores in the same quarter last year. Cumulative booking value till date is about 747 crores. For Mulund, Enigma, in Q4FY18 we booked about 5,360 square feet. Till date we have booked about 3.54 lakh square feet. And the total booking value for Q4FY18 is rupees 8 crore as against rupees 16 crore for Q4FY17. Cumulative booking value till date is about 521 crores. Moving on to Sky City, we booked a little over 54,500 square feet in Q4FY18. Till date, we have booked 13.37 lakh square feet. The total booking value for this quarter was 84 crores as against 43 crores for Q4FY17. And till date, the booking value is about 2,137 crores. For Worli Oasis, we have booked 9,500 square feet in this quarter. Till date, we have booked 4.42 lakh square feet. The total booking value for this quarter was about 43 crores, and the total booking value till date is at about 1,759 crores. Coming back to some key financial parameters, our EBITDA margins for this quarter was 53%, and for FY18 was also at 53%. PAT margins were at 40% for this quarter and over 35% for FY18. And the EBITDA margins for mall and commerce are as usual much higher than the averages as mentioned before. And excluding them, the margins for our pure residential business stands at about 48% for the full year. With this, we would like to open the floor for any questions that you all may have. Thank you.
Thank you very much. We will now begin with a question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. All are requested to restrict their questions to only one question per participant at a time, so as to ensure maximum questions and participation. While asking a question, participants are requested to use handset mode only. Anyone who wishes to ask a question, please press star and 1 at this time. The first question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yeah, thank you, sir, and congratulations on a good set of numbers. Sir, can you throw some light on any plans for the Thane land? Any color in terms of when we could see, some launch from that parcel and the configuration of projects and the total sellable area?
Hi, Atul, Saumil here. We are still in the process of, closing out the transaction. And what we are looking at is, from an architectural perspective, we have started work on the design of the project. We are working with a whole bunch of architects in terms of the concept and all of those. One thing which we are very clear about in terms of the launch is that the launch would definitely be in this financial year. In all probabilities, so if you look at it, we have always said that between the festive season is something that we could be looking at as a launch for, this project. So maybe about September, October of this year is in all probabilities the launch. In terms of configuration and all of those, these are still pretty dynamic. We are also at our end studying the market, seeing what all is there, what is it that we could come up with. Obviously, if you look at the way the Thane market is, we will end up doing some bit of mid-sized, apartments and some other bits. But I think, we would want to discuss that in far greater detail as we get closer to the launch and as we get more clarity on, how things are working out from an architecture and a design and a market's perspective. So that's the limited bit we have right now. We have always maintained that, once we close out everything, once all things are done, then we will come out and give more color around how we want to go ahead with that project.
Yeah, and sir, any comment on the sellable area that we could get? From the total land parcel, taking into consideration.
Again, these are all once we finish the entire acquisition. I think it would be better for us to commit on that entire potential at that point of time rather than say something now and either end up looking very conservative or end up looking very over-aggressive,
Okay, sir. Okay. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Abhishek Bhandari from Macquarie. Please go ahead.
Yeah, thank you for the opportunity. I actually had two questions. First question, because you mentioned in the opening comment that you've seen a good response to this discount scheme, so-called discount scheme. Can you throw some more light over there? And do you expect this scheme to significantly, increase your sales velocity in those two projects?
I can easily answer your second question because it's not quantifying something. These are all market-sensitive information. But like I said, that the response has been phenomenal, and we are very excited and motivated to do similar schemes at other projects also, and for other inventory that we have and stuff like that. So again, it will be project specific. Again, it will be to boost sales in certain projects, and we are currently working on it, and hopefully come up with something.
And in terms of velocity, from our perspective, we have already seen, if we can say that, an increase. I think maybe we'll just wait for the June numbers to come out, and I think it will then be easy for you guys also to see the impact that this has had on, the offtake and the velocity.
Okay, sure. Thank you. And the second question is around this accounting. This quarter we had some deferred tax creation which led to overall tax rate coming down. Mm-hmm. So could you explain what is it regarding, and on a sustainable basis, what's your effective tax rate?
No change on what we can say effective tax rate on a sustainable basis. These are just some true-up adjustments which we typically end up making at the end of the year. So I wouldn't want to read anything more into this than the fact that it's a true-up adjustment at the end of the year.
Okay, thank you, and all the best for the year.
Thanks so much, Abhishek.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much for the opportunity. Just continuing on the same deferred tax thing, what really led to this creation?
Sorry?
What really led to this deferred tax?
There is no, it's not a deferred tax creation or anything. It's just a tax adjustment which we have done. So as I said, this is the end of the year adjustment. These are tax-related matters, so I typically don't, get into more details on that one. As I suffice it to say what I mentioned earlier, that it's a one-time tax adjustment.
Okay. Then broadly on this leasing side, with 4 more floors getting leased, when does the rent start kicking in, and what does it take you in terms of occupancy?
So in terms of occupancy, I guess we would land up at close to about 63-64% or thereabouts. Okay. Again, as Vikas also mentioned when we began the call, that in addition to this, what we are seeing is also a very healthy pipeline in terms of inquiries. So that also gives us a lot of confidence in terms of how it would go. As far as this particular transaction is concerned, if I'm not mistaken, the rent commencement is definitely in this quarter. I'll just have to come back to the. The rent commencement is with effect from July, so it will be with effect from the next quarter.
Okay. And how are the terms of trade here? Is it similar to what you've done for the previous 48%, or is it different?
It is pretty similar. It's all, everything is in the same ballpark now,
Okay. So there is no revenue sharing kind of thing here, right? So flat rental that you will earn irrespective of how they do.
Correct. That's typically an office space concept, The revenue share is more what we are seeing in the mall rather than in the office space asset.
Yeah. Okay. And then there was also a bit of, price discrepancy between Esquire and Exquisite. Has that gone completely now?
More or less, yes, it's gone, in terms of the way it has been priced at now, both are almost similarly priced.
So on per square feet basis, from a buyer's perspective, it will not make any difference whether he's buying Esquire or Exquisite.
Correct, except for the aspect of the size of the apartment, other than that, nothing else.
So on per square feet is the same realization. So
it is more or less similar.
In a way, Esquire realization would have gone up. Is that fair to assume?
In a way, yes. But so, for example, the reason Exquisite always also ends up being on the higher side is the inventory on the, as far as Exquisite is concerned, is now all on the higher floors, 45 and above.
Right.
So when that gets sold, it comes with its corresponding aspects of floor rise. And as far as Esquire is concerned, we have inventories kind of spread a little over, all the floors. So there the average realization ends up being a little lower.
So what is the base rate right now?
It's close to about $17,000 a square feet in terms of a base rate.
Okay, and for Exquisite?
Again, similar.
It's similar. So 15 has gone up to 17,000 in a way. Yeah. Okay. Lastly, any progress on the mall which was supposed to come in Worli and Borivali?
Yeah. So in terms of work internally, there is more than a fair amount of work which is happening internally. In terms of site preparation at both the sites, we have started our site preparation activities. And once we freeze out the plans and get all the approvals, then again, that would be the time to come back to you all in terms of what are the exact areas and all of those,
Okay. Has the construction contract been given out already?
Yes. For both.
For both. Okay. And sorry, just one more. In terms of the third phase in Goregaon, any comments here? How are you thinking about that now?
That also work has been, contract has been issued. In fact, a very interesting data that comes out is after we are done with Esquire, we from our own counter will not have a single ready apartment left for us to sell. Everything that will come after 3.5 or 4 years when the third phase of Exquisite, Esquire and the third phase comes into play.
Yeah.
So there again, work has been, work order has been issued to L&T.
Okay.
And, so site preparatory work is on.
Excavation is on.
We want to finish this scheme bit. We want to get the right numbers in play. And we then probably might launch that also instantly.
Okay, so again, looking at launch...
non-competing product because this will only come in, get ready in the next 3.5 years.
Right. So should we look at launching this also around September, October?
Same festive season, yes. And we want to, start the work, get the momentum on site so people know that, the work is started and it's progressing well and stuff like that.
Okay, great. That's all from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Aditya Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. My first question is with this Mumbai development plan which has just come out today. So, would you see some delay in any approvals coming in now in the year? Although I know you have already purchased a lot of the TDR and other stuff for your Goregaon and Borivali projects. Do you envisage any delays there?
So in fact, Aditya, this is a positive because the delays were because this plan was not coming out. Now that the plan is out, there is clarity and certainty. So things will only get better.
Okay, but do you need to rework any of your plans, or do you see because of that?
No. I again want to tell you that there is really no surprise built in, because the government had in piecemeal got a lot of it in play already, like the FSI in certain road widths had gone up. So all these were all very either already declared or the intentions were clear. So there is really no surprise element in this at all. We had already planned, and then all the developers, I would say to their credit, would have planned, because this information was very easily available.
Okay. And do you envisage FSI going up anywhere on account of this?
Whatever I read little, again, it's not going up in this thing. It's pretty much generalization of FSI. They want to give boost to commercial, so they are pushing commercial FSI in city and so on and so forth. But nothing other than that,
Okay, fine. And second question is now, this is the Saumil, on the revenue recognition for both Mulund and Borivali. So when do we expect, in which quarter around? In the first half or second half of this year? Any clarity on that?
I think as far as Borivali is concerned, the first half of the year is very much on. As far as Mulund is concerned, also Eternia should be pretty much again the first half. As far as Enigma is concerned, we just have to ensure that we hit that 25% sale mark, and then if that happens, then that is also the first half of the year.
First half. And just last question, any activation plan similarly for Mulund? Because I understand like Goregaon is a lot of completed inventory. But again, Mulund, we are just, a third of the way in terms of construction. So any specific plan to do any activations to boost the sales rate there?
I think we will see as we go along. We are also keeping a track of what we are selling and how much we are selling. So as and when things work out, it will happen. But yes, we have clearly got an eye out on what our go-to-market strategy is in the coming year. And I think you have already seen the first rollout of that happening in terms of Exquisite and Esquire. So let's wait and see how it kind of rolls out,
Okay. Thanks for answering all my questions.
Thank you. The next question is from the line of Kunal Lakhan from Axis Capital. Please go ahead.
Yeah, hi.
Hi, Kunal.
Hi. Just on Worli, this quarter we saw like a big drop in terms of sales traction versus what we saw last quarter. Is this more of a timing issue to close the transaction, or basically how should we look at the run rate going ahead?
No, absolutely correct. We have our internal processes which capture complete closure of a transaction. So it's just one of that, nothing other than that. The demands are fantastic. In fact, if you will see, collections from there also have been very good. So absolutely on track, in order.
Sure, great. In terms of, this is for Saumil, have we now have clarity on what will be the overall land outlay at Thane, including the approval costs, the fees, and the conversion costs?
So I think, I think I mentioned even before this that, we are still in the process of, closing out that whole thing. So give us maybe a quarter or so more, and I think we should be able to come back to you all with full clarity on that one. We have our own internal handle on it, but let us just finish the whole process, and then it will be far easier to come back to you all with more accurate numbers.
Sure. And lastly, you've taken approval for fundraise of 2,000 crores of equity. How likely will that be this year?
You have seen us doing this enabling resolution for the last 4 years. So,
yeah.
We have always said that, we always like... See, from a typical perspective, if there is a transaction in the market, in the physical markets where there's a land acquisition opportunity, if you try to do anything around those times, then getting shareholder approvals and all is a typical 30-day process for the whole thing. So from our perspective, if you see, this is what we have been doing for the last 4 years. We take an enabling resolution and we wait. So as I was just discussing with somebody else also earlier today, just because, I have loaded the gun doesn't mean I'll fire it. But, it also means that it's easier to press the trigger when required.
Sure. Great. Thanks so much. And all the way.
Thank you. The next question from the line of Abhinav Sinha from CLSA. Please go ahead.
Hi. So just a couple of questions. So firstly on the Esquire project, we did have, I think, the OC received in January, but the sales surge wasn't, it wasn't that high, right? So, and you have launched this new scheme now. So is the market, underlying market, what are you reading now?
We just thought that if you want to create velocity, we'll have to do something different. And this is exactly what we've done. We preempted the market and just went and did that. And like I said, we received phenomenal response and very excited about it. There's no point in retaining that inventory and holding on for 3 years or 2 years. If I continue with that velocity, I'll take 3, 4, 5 years to sell the rest of the stuff. So I didn't want that lag to happen, and this is why we really tested the depth of the market by doing this. And like I said, that we've received excellent response.
Right, and see, just on the scheme itself, so how will your cash flows work here?
So, people pay us 25% upfront, and we give them literally a credit to pay the rest of the 75, which they do in the first year, second year, and the third year. And just so that we are sure of the money that we should receive, we make sure that these guys are all bank loan approved. And we simply go and discount that money and take it, today. So the bank takes the payment risk from the customer directly. All the customer needs to do is either refinance it after or the first, second, third year installment, or go and pay it to the bank, because we've already discounted that money and received it.
Okay, and so roughly your net realization should not vary too much, right? I think that is what Saumil was saying earlier.
Yeah, exactly. Yes.
Yeah, okay. And so secondly, beyond the third phase in Goregaon, what are the launch pipeline that we can expect for FY19?
Thana property is the one. Again, we've got Borivali. Next phase, we've got Borivali Mall, we've got Worli Mall. So all these are there. Enough work.
Okay, thanks.
Thank you. The next question is from the line of Chintan Modi from Motilal Oswal Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just one thing first of all, on the collection part. This quarter we have seen pretty strong collections at 546 crore. So just wanted to know that you had mentioned in quarter 2 that there are some collection being postponed. So is that an effect of because of that?
Yeah, so if you recollect, consequent to RERA coming in, we had worked out all the agreements under RERA. So consequent to that, there was a little bit of a pile up on collections. So one aspect that you are seeing is the unwinding of that. And as far as the other aspect is also concerned is, you would have seen that, we have started handing over possession in Esquire. So the demands for that also were raised. So even that is, so to say, contributing to the cash flow.
Sure. So that is now fully being, what has been piled up is now recovered, or we will continue to see in further quarters also?
No, more or less. I think if you would see in most of the cases, I think, whatever was the billing stage to be done until then has been done. It's simply a question of the money is coming in now over the next quarter or so. So now the lag effect is, so to say, over.
All right. And in your launch pipeline, do you also have Commerce 3 to be launched in FY19, or you're planning to?
Oh, yes. So that is also something that we would look at now that, Commerce 2 is done well. If you recall, we are already, as I mentioned earlier, at about 63-64%. A few more transactions and we should be up into the 80s. That would give us a very good support and a lot of confidence for going ahead with, Commerce 2.
Okay. So can you also give us some highlight in terms of...
Now, so that's the other angle to it.
Yeah, so I was just coming to that. If you can just highlight, how is the market behaving in terms of commercial overall, specifically if I look at the Goregaon area. There are a few more launches also being planned by some other peers like UNESCO, which has a new commercial office coming up by December.
No, from our perspective, what we, as far as Oberoi Garden City is concerned, we believe that it's a fantastic location in terms of being an integrated development. So there is the residential around it, there is the mall around it, there is the hotel around it. So the entire support system for the office also is pretty strong around this area. And then if you look at it, the metro connectivity. So again, as far as this one is concerned, again, we have a metro station bang outside the complex. So that also, of course, the metro connects everybody on the highway. But from our perspective, it just adds that much more to us also. So if if you look at it, if it genuinely becomes a commercial hub, it's a nice thing for the whole area to develop. I mean, if you look at BKC, again, it's not dominated by one building or one developer. There's a huge cluster of development. So we are very happy if the whole area develops as an office location. And it, in a way, also helps us with our residential market because people staying close by would want to come and stay close by. Working close by would want to come and stay close by,
Great. And just one data point, like for 360 West, how much we would have spent till now?
Again, sorry? So it would have been close to about a 2,000 crore spend.
Okay. This includes Ritz-Carlton? Ritz-Carlton separate?
It does.
Okay. And Thane, if you can mention, like, where do we stand in terms of, approvals and how much we would have spent till now? Is that the only land we have paid for?
As far as Thane is concerned, I think, as I mentioned earlier, also give us a quarter or so and we can come back to you with all the numbers, including what all has been spent and everything, So just give us a quarter. Let us close that out and come back to you.
Sure. Thank you. That's it from my end. Thanks.
Thank you.
Thank you. The next question is from the line of Manish Gandhi. He's an individual investor. Please go ahead.
Yeah, thanks for the opportunity. So my first question is, sir, will you be able to share detail about our new Tardeo project for which we have recently awarded construction contract?
Again, not a very large project, Manish bhai. The total area there would be about anywhere between 3.5 to 4 lakh square feet. Other than that, and let us get to a situation where all the approvals and everything are in place, and then again we will come back to the markets with more information about that.
Okay. One more thing, just to add on that resolution. So surprisingly, you have upped the limit from 750 crore to say 2,000 crore for the QIP. So now we are sitting on 3,500 crore limit. I'm sure it is not for Thane. So are you sensing, I understand that what is the technicality, but are you sensing that you have a great opportunity in hand or something on table that you can close this year apart from Thane? Are you looking for something like that?
From our perspective, we have always said that, courtesy RERA and courtesy everything, there are going to be a lot of opportunities that are going to get thrown up. Some of them would involve, say, a joint venture or something like that, which would be a little more capital efficient. And some of them could also give us opportunities in terms of outrightly buying out the lands from the developers or even per se from, of the kind of transaction that you saw as far as the Thana land was concerned. So from our perspective, we, again, as I mentioned in my earlier answer also, we always like to be ready. This is an enabling provision that we have always had since the last 4 years. The quantum that we were looking at that point of time would have been based around the market value of the company at that point of time. Today, if you look at the market cap of the company, that has also changed substantially. So I would only read that much and not more. So from our perspective, it's always been kind of a Boy Scouts motto, be prepared. So if there's an opportunity which comes, we don't want to be spending time then, spending 30, 40 days in terms of getting shareholder approvals and all of those.
Definitely. Just to squeeze one last one. Sure. So regarding phase 3 of Goregaon, so it's almost 65 plus story tower of 5 towers. So as per our old presentation, we have 1.6 million resi. So this is, of course, going to be much bigger than that. So can you quantify that?
Again, I think our responses to almost all these questions are, we always like to come back to the markets with more color, once all approvals and everything are in place. That just helps avoid unnecessary estimations or, as I said earlier also, you don't want to be overcautious and you don't want to be over-aggressive. So we are happy to, get full clarity and full confidence about what the total potential is and then come back.
Okay. I think in this case you are overcautious, so that's very good to be. Thank you very much. All the best.
Thank you so much, Manish bhai.
Thank you. The next question is from the line of Archana Menon from Morgan Stanley. Please go ahead.
Hi, can you hear me?
Yeah. Hi, Samir.
Yeah, hi, this is Samir. Good evening. Quick question, because to you, it's on your discount scheme. Is that, does it show that you misread the market in terms of the pricing and the real price is actually 10-15% lower, and that's what your discount scheme achieves?
Good evening. Firstly, the velocity that which we want to achieve probably would not have been achieved had we not come up with this sort of scheme. And again, these schemes also given a lot of emotional value more than, merely price. If you see the prices of both Exquisite and Esquire are not less. They are at least 30% or 40% higher than its closest development. So I wouldn't read as much on price. It is more like, the product is ready. We want the volume and, we can afford to do this. And I thought it appealed the emotional sentiment of the buyer. And this is what we've really gone for.
When you say, Vikas, that you're going to try to do something like this in other projects as well, the big difference between this and the others is this is now completed, ready inventory, and others, my guess is that even the revenue recognition has not started. So why would you want to do this sort of a thing in other projects?
We feel that as a company, we want to increase our market share when it comes to volumes. And we also believe that, doing more work, we can make more money for all our stakeholders. We as a company have evolved and we are in a position to build a lot more and with as good or even better quality. So I feel, we want to gain market share, we want to scale up. And if this is the game one has to play, then so be it. But we really want to test the depth of the market and we want to go for it. I'm really hoping that we are on a right strategy. If there is anything that you must tell me which is different from what we think or are doing, I'm very happy for advice also.
Yeah, sure, appreciate it. No, I think clearly the sales velocity shows because that the pricing had, and it's not about you, it's about the market. Prices had run ahead of the demand, maybe by 2-3 years, and developers were sort of keeping the time value with themselves. And that's the reason why, we are saddled with so much of, unsold inventory. So, but just moving on, because my guess here is that I don't know how many units you sell and that you can call success. Maybe 350 is unsold, maybe you sell 150, 200, whatever. But the point here is that if you get, say, 1,000 crore or 1,500 crores or whatever upfront within maybe a quarter or two, what's your thought process of deploying this capital? And I guess that's the whole reason why you're doing this.
Well, we obviously believe that we want to buy land and this will be the best way to do that. Again, like I said, that we've changed our philosophy. We want to build a lot more. We want to sell a lot more and thereby make a lot more money than rather sitting on inventory and waiting for it to appreciate. So if I were to say that, yes, we don't see, prices appreciating going forward. But as a company, we have enough to build and, make money out of. considering today's land price and construction cost, and then selling it. So we feel that we want to play that game.
So you have deals on the table at the moment that you can deploy this capital?
We genuinely process 2,000 land proposals every year, and literally end up buying one because we go for the best and the best and the best one only. But again, we see a lot of deals that are available. We let them go for multiple reasons. But we could look at them as well.
Okay, and see, on capital deployment, once you go to Borivali Mall, Worli, and Commerce 2 Phase 2, all three of them, sort of upfront capital and no concomitant inflows. So what's the total capital outlay between these three over next 2 to 3 year time period? And how do you plan to fund it?
Well, we'll obviously be taking construction finance, and we'll fund it through that. We are still working out the numbers. But again, for our mall, we have so much demand for both Borivali and Worli that I can pre-lease it in the next one single quarter if I want to. If I was, again, not very, price sensitive on the rent I want to gain. So I have that kind of demand today. So this is exactly what we are doing. And then once, if these are already spaces that are leased out, they pay back for themselves. So construction loan will probably go away in 2 years or 3 years of its rent.
And how do you total up the full outlay for these three projects?
We are still working because we were waiting for these new policies to come. We want to understand what part of that area we need to buy from the government, what part of that area will be available on a premium, and what part will be coming in by way of TDR. There is a that metro TOD scheme that is going to come in and all that, transit-oriented development scheme, where the government will sell that FSI to fund the entire TOD and all that. So we just want to finally have that number in hand and then come and tell you exactly what will it be.
Okay, great. Just one final with your...
No, please go ahead.
Worli, that has been taken up, has been bought out by Oberoi.
Sorry, come again?
The plot which is adjacent, I think the Crompton Greaves plot has been bought by Oberoi. Is that true?
No, that's not true. That's not true. I wish it were true, but it's not true.
Okay, great. Thank you. That's all from my side.
Thanks.
Thank you. The next question is from the line of Samar Sardar from Kotak Securities. Please go ahead.
Yeah, thanks. Good evening.
Hi,
I just have a couple of... Hi. I'm sure. Just a couple of questions. One on your Mumbai Central project. Wouldn't want the numbers, but just understanding the size. See, mostly we've been developing larger layouts. So what is the thought process of getting into a smaller project? It can be a little high value, but 400,000 square feet plus minus. And if you're getting into one such project, is there plans to replicate this across different markets of Bombay?
We've always been open to projects that are smaller. Yes, as a strategy, we like large land parcels, but this is a good deal. Like Somil said, that once we get all our approvals in place, we will explain the entire transaction. You will be very happy and proud of the fact that we did this. And it's a beautiful location overlooking the Wellington Club. So very beautifully located. And so it's a good location, and we were very tempted to do it because of the location itself.
Okay. And one question on Thane. Of course, I wouldn't trouble you on the numbers. Just on the payment front, since the ready reckoner has not gone up, the payments which have to go to the government, because it's a big quantum, will they happen in FY19 by the end of the fiscal, or you're thinking of pushing it to next fiscal?
No, it'll happen within this year itself. Because if we are planning to launch it, then obviously we'll have to make sure that, everything is done and we are in control of the entire land parcel and all.
Okay. And one last question was on the absolute debt. It would be a number around 1,900 crores by the end of March?
It would be around close to about 1,600, right? Yeah, it would be close to about 1,600 crores.
So just a question on there, like, again, it's the best balance sheet in the industry right now. But from an absolute debt perspective, what is a comfortable number for the management? Like, is it 2,000 crores, 2,500 crores? So to what level can you take this debt to?
Ideally, we wouldn't want to increase our debt, and we want to keep the ship tight. And we may not even need it as such with the way we are now, planning to sell or whatever. But like I said, that, it's all opportunity driven, and we take this very seriously. Haven't had a number in our head, but it certainly is, conservative, very clearly.
If you look at the sector, if you really look at it, whereas all the aggressive leveraging by all other developers got them to also, So you can expect us to continue to follow prudency. If you look at the revenue recognition coming up in terms of Mulund Borivali, that cranks up your net worth also. So again, your debt to equity ratios start looking very different, So it will all be relative at all points of time, Samar.
No, I was more on absolute debt, but that's all right. So thanks for this and all the best for FY19.
Thank you.
Thank you, sir.
Thank you. The next question is from the line of Mohit Agarwal from IIFL. Please go ahead.
Just one question. So there's an increasing trend among Mumbai developers of cutting the apartment sizes in order to reduce the overall ticket size and, make it more affordable. What's your thoughts on the same, and, do we plan to do something like that going forward in our new launches, or we continue with the typical 3-bed configuration that we do?
If everyone is doing 1 and 2 bedroom, there'll obviously be a huge, oversupply in that segment. And having said that, we other than, we have a good brand reputation, and we are able to build quality and sell these larger apartments much more than anyone else would. So obviously our focus is going to be, to do this. And in some markets, maybe like Thane and all, we might come up with apartment sizes that are smaller. So we will play within this for now.
Okay, sure. Thank you.
Thank you.
Thank you. The next question is from the line of Saurabh Kumar from JP Morgan. Please go ahead.
Hi, Samal. Hi, Vikas. Sir, the first question is essentially on the accounting of the scheme. So basically, whatever you sell, the balance money which comes sits as debtor on your balance sheet. So it's on the receivable side, and against that you have a securitized debt on the liability side.
No, not typically, because once we have collected the money, we won't be reflecting it as debt.
Okay, so this will just be an off-balance sheet.
Yeah.
Thing for you.
It's no off-balance sheet also. As far as the banks are concerned, the loan is to the customer, so there is no off-balance sheet also as far as this is concerned.
And we will take it net of the interest cost that we'll have to incur. So we'll only get net what we, are supposed to get. Our obligation is done. We don't have to repay to the bank. The customer has to repay them. So in our books, it will never look like a debt.
It's not a debt.
It's not even a debt, really. Technically also, it's not a debt.
No, it's not a debt, but okay, so there's no receivable and okay, fine.
Nothing like that.
Okay. And the second question, Samal, you just referred to this market capitalization of the firm. So, so we obviously get a boost in profits in fiscal 19.
Correct.
Because you have 3 projects and hopefully Worli if it comes. But F20 onwards, if somebody has to look at, can this profit sustain? And I was just looking at your pre-sales. We were kind of stuck at that 1,300, 1,700 crore range. We just broke out once, but we've been broadly there for about 4 or 5 years. So, do you think you can get to something like 2,500 crores for you to sustain profits beyond fiscal 19, beyond the bump up you get next year?
Yeah, so again, if you look at it, the bump ups coming just from the first phase of both Borivali and Mulund. We have the second phase left as far as both are concerned. If you look at Thane, so maybe by the time period you're talking about, even Thane starts coming into revenue recognition and all of those. Then we have the phase 3 of Goregaon, which is going to come in. So these are all large, meaningful projects which will all contribute very well as far as the P&L is concerned. So I don't see so much of a problem as far as the sustainability is concerned, because just look at everything that we have right now, that itself is, good enough to sustain. Plus, whatever additions come along as we move down the line also,
Okay, but eventually for that, you will have to get to about 2,000 crore plus number. That's the number I was getting to.
Correct. So, Worli starts coming into the recognition and, Worli would then continue to kind of, over the next couple of years after that, also contribute meaningfully to, the overall this. So, as far as things till 22-23 are concerned, I think we have a fair amount of clarity as to how this pans out.
Okay, that's good to know. And second is essentially on this Worli thing. So Vikas obviously mentioned that you don't want to be stuck with inventory post-completion, and that's heartening to hear. But that will likely be the situation in Worli because it will get completed hopefully over the next 12 months. And you will have almost whatever, the way you depending on how you calculate it, you will have between 5,500 crores to come from that. So, if you sell everything. So, would you want to figure out some activation around that maybe today just to get that thing in as quickly as possible?
Well, all these schemes will be literally like horses for courses. We can't generalize everything at one go. As, someone earlier mentioned that these are inventory, this is ready. Others are under construction. We still have a lot of time. And when it comes to Worli, we'll see how the velocity is. And again, today, I genuinely feel that Worli is underpriced compared to the product that is ready and available. Today, a Beaumont is available for 125,000 rupees a square foot on carpet. And we are still at, 60,000-70,000. Beaumont is not a Samsung built or KPF designed or, such a sophisticated building as ours is. It's a good building, but it's good, it was good in its time. This building is far superior. So we feel that once, our entrance lobby is getting ready, our club floors are getting ready, it's a product Mumbai hasn't seen. So we know for a fact that there are a lot of people who are fence sitters waiting for, the building to get ready. They don't have any compelling reasons. One, it's not even ready that they can pay and move in. So they're waiting for reasons for them to come in and buy. And one being that the minute it's ready and people start moving in, you will see momentum. So I don't think Worli one will ever even require to discount. It's a beautiful product. And we hardly have anything to sell beyond this.
Okay, and just on your Renco assets, so when does this Borivali and Worli mall complete, and when does Ritz-Carlton commission?
So Ritz-Carlton would be about September, October next year. So put it as Q3 next year. And as far as what we can say, the other two are concerned, give it about anywhere between 2.5 year kind of a timeline.
Okay, so Q3 F20 you are talking about, not September. Right?
Q3 F20, yeah.
Okay,
Q3 F20.
So basically our rental grows in F19 basis the leasing you achieve in Commerce 2, and then the growth then is substantially F21 weighted.
Right.
Okay. All right. Thank you very much.
Thank you so much, sir.
Thank you. The next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hi, Vikas and Swamin.
Hi.
So, Vikas, I have a question for you. It's heartening to know that you said that you're focusing on now sales velocity and getting volumes and higher market share. So, pertaining to that, are we looking out anything at all? Earlier, we're planning to diversify outside Mumbai. So, is there a plan for doing that now if you're focusing on volumes?
Well, we continue to look at property outside Mumbai and our start that we want should be with a landowner who's willing to do a JV with us, who has, a good local connect. We haven't been able to get one. The minute we do that, we will obviously be at it. Once we are able to set an office there, then we will look at buying land parcels also. So And again, we are in no hurry. We want this company to last 100 years. It could happen in the next 1, 2, 3, 4, 5 years. There's no real urgency. We are doing enough work in Mumbai. So we want to go with the right partner for the right cause, with the right reason and all that, So that's where we are.
In regards to this new DP, so will this be FSI neutral for our portfolio in Mumbai?
I still have to study it. It's a positive for the whole of Mumbai, really. So I see it more positive than neutral, but I have to still study the entire impact and then come back.
And they are adding around 4,000 hectares of opening up, I would say, other land. So which is like 8 or 9% of total land in Mumbai. So how will it impact? I mean, obviously it will open up a lot of land opportunities, but in terms of supply, will it restrict further, pricing, appreciation?
It's music to my ears because this is the raw material I need for my product, and we are able to build well. We have a good reputation. If the market size increases, it's only a huge positive for us. And like I said, we've changed strategy, we've changed gears, and we are getting ready to build more and earn more money out of building more. So price is not something that we are really concerned. If land prices get, rational, our profits are more out of processing land into ready product, and we'll continue to do that.
But we'll stay around the similar band of margins, like which 48, 50% in the resi business.
That again, like I said, that we want to focus more on quantity of money earned rather than, the margin.
Okay. And just lastly, for reason, last time in the call you had mentioned that there is one big corporate office to get shifted to Commerce 2. So has it happened or is still awaiting?
So this is what we were saying. The WeWork was this international company we were talking about.
Okay. Okay. Thank you so much.
Thanks.
Thank you. The next question is from the line of Dhruvesh Sangvi from Prospero Tree. Please go ahead.
Yeah. Hi, sir.
Hi,
just one question. Can you just give us some background about the Juhu property? What actually happened in a nutshell, and where are we heading, and by when can we have some resolution there?
Sorry, which Juhu property are we talking about?
The Tulip Star.
Okay, so there's no progress there. We have, sorry? The matter is in court. We are seeking, specific performance of the agreement that we've entered with them. But nothing's really moving there as yet.
Okay. Any ray of light that we can have from there?
Well, we keep talking to each other offline, but nothing's happening as yet.
Okay. And so the last one, within Esquire, in the current activation, are we also having a similar possibility for the larger price penthouses and the duplex that we have there? And is it the similar form of demand coming in there as well?
Yeah, absolutely. The demand is overall, like I said, we are appealing more to the emotion of the buyer than anything else. It gives him that confidence. He comes in with less money, and the rest of it is staggered. So this is a huge positive for them.
Great. Thanks, and best of luck.
Okay.
Thank you, Dhruvesh.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
Thank you all for taking time for this conference call. We like receiving feedback from you all. It only helps us think better, deeper, and improve our performance. Please continue to give us your views and input, and continue to help us deliver better. Thank you again.
Thank you. On behalf of